Hey folks, David Frost with another video in the Gap Trader series from lazygaptrader.com. Here we're looking at a stock of Fortinet. FTNT is the symbol. And the reason why I wanted to bring this up, because this is a great strategy that I teach in my course. And what happens is we put out this trade to members who get our trade alerts each and every morning on the morning gap trades. And last week, this stock was gapping up. And we had a gap level at $30.31. And on that day, you can see that we came up short. It didn't hit the level. And that happens. Not every stock is going to hit the level that we specify in the morning. But we only take trades at a specific price level because that's where our probabilities are the highest. However, in my course, I also teach that you get another bite at the apple. And here we are, just several days later, where we got another bite at the apple. Now, the gap that Fortinet left on the day that it gapped higher was right in here. So on the 28th of January, it closed at 26.36, and on the 29th of January, it opened at 29.98 all the way up here, leaving this enormous gap. Now, while it didn't hit our morning gap trade level for the pullback, and that would have been a really nice pullback, and we do get those a lot of the time, we do get another bite at the apple. So what happened just a few days later, Fortinet came back to test and fill the gap that it left from the 28th of January. And as you can see today, it filled that gap. Now I'm going to go over to a 10-minute time frame and show you what happened. So we came down, and in one candle, we pierced through the gap, trading down to a low of 26.23, certainly well within our risk tolerance level. Now, just in the next candle alone, Fortinet traded a high of 26.57. So just in a couple of minutes, we had a gain of 20 cents. Now, some traders only trade a couple of hundred shares, and that may not seem like a big deal. But other traders trade 2, 3, 4,000 shares for a quick scalp trade, and that's a big deal in just a few minutes. So even at that, if you held on to the stock, you got a chance to have more gain because later on this morning, it hit a high of 26.71. So off of a buy level of 26.36, that's a 35-cent gain. Now on a quick scalp trade, an intraday trade, something we're not looking to marry or hold overnight, that's a nice little gain. So this was an example of, in my gap trading strategy, I teach two methods. I teach two strategies. One is the morning gap trades where I provide the levels, and I also teach you how to get the levels where a stock is likely to find support and resistance and have a nice healthy pullback or bounce off of a level where a stock is gapping down. The second strategy is where we get another bite at the apple when a stock is likely to come back and fill their gap. And this was a great example of just a couple of days later where a stock came back to fill the gap, and it was a nice quick scalp trade. These are there all over the place, day in and day out. You can literally find dozens of these a day. They're not short on supply. So come over, check out lazygaptrader.com, and I can teach you how to do the whole thing and teach yourself how to make money in the markets each and every day. This was David Frost, lazygaptrader.com. Thanks for tuning in, folks.